Infinite banking. What's the catch? Well, let's see. Infinite banking with an account properly designed for it protects your money from any and all outside assaults, such as lawsuits, collections, bankruptcy, attachments, etc. Infinite banking accounts earn the highest compounding interest available and without being taxed. Infinite banking allows you to earn that high compounding tax-free interest even while you leverage the same money to finance things. Infinite banking lets you finance things without losing money in fees and interests. Financing with infinite banking gives you complete flexibility in repaying loans. Infinite banking provides the perfect sweep account to rapidly reduce debt. Infinite banking gives you the means to actually collect interest on the money that you pay to the IRS for your taxes. Infinite banking grows your money guaranteed with high compounding interest and with no risk of loss. Infinite banking comes with life insurance that becomes free after just a few years. And there are more benefits. But with all these benefits in mind, the questions nearly always come up. What's the catch? There has to be a catch, doesn't there? Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. But before I go on, if you like this video, please go ahead and click the like button somewhere around here, and please subscribe to this channel. Okay, so what is the catch? Or is there a catch with infinite banking? Now, I had to really think about this in order to come up with anything that might be considered any kind of a catch to the infinite banking paradigm. I know it sounds too good to be true. And if anything, that is the real catch, because it sounds too good to be true. Many people, when they hear about all the fantastic advantages infinite banking provides, they just can't believe it. And so they walk away from it and never get to experience the benefits for themselves and their families. And I think that is a terrible consequence. Now, infinite banking accounts can be designed with policies that are set up for premiums to be paid for 10 years, 12, 15, 20 years, or up to age 65 or 100. So I suppose a person could see that as a catch. I mean, the scheduled premiums do have to be paid as agreed, or the policy could lapse. But a notice is sent to the owner of the policy if the premium becomes past due. And at that point, if you know you aren't going to be able to make the premium payments going forward, you can surrender the policy and get your accumulated cash value out of it. You don't lose. That's one of the reasons why I like the pay to age 100 designs, because that makes available the maximum number of what you might call bailout options. For example, let's say you had the policy for 10 or 15 years and you don't want to pay premiums anymore. You can exercise a reduced paid up option, and that will retain all the cash value the policy is built up, and it will continue to grow with the compounding interest. It will also retain a good portion of life insurance that will also continue to grow with the dividends paid, but you won't have any more obligation to pay any more premiums. Of course, you can still use the account for infinite banking. You just won't have any more premiums to pay. It's like you converted pay to age 100 into a pay 10 or 15 pay. Well, the cash value of an infinite banking account grows steadily and surely with high compounding interest. It is true that it takes a few years for the cash value to grow to the point where 100% of the money you deposited as premiums is reflected in the cash value growth. And the celebrity pundits like Dave Ramsey and Susie Orman like to point out that the cash value of whole life insurance grows so slowly that you are in a negative balance to what you pay in for a very long time. That's true with most straight whole life policies. It can take 20 years for the cash value in a straight whole life policy to catch up with the total premiums paid in. But with a policy designed properly for infinite banking, by the 5th or 6th year, typically the cash value is growing by an amount equal to or greater than what you're paying into it in premium. And typically by the 12th or 13th year, your cash value will exceed the total of premiums you've paid in. And think about it. The premium is paying for life insurance that eventually will pay a tax-free cash benefit to your beneficiaries in an amount several times greater than what you ever paid into the policy in total. So that can't be considered a catch at all. Now, I'm stretching here, but there could be possibly a scenario where a person has a 15-pay design and they've paid all 15 years of premiums. Now they leverage all their cash value and don't pay anything back to the loan. And the interest payment comes due, and there isn't enough cash value left to cover the interest charge. And the person just doesn't pay it. Well, of course, at that point, policy will lapse and the policy will be gone. But again, think about it. The owner of the policy had more in cash value than they ever paid into it. They used the cash value for whatever they wanted to by leveraging it with policy loans. And during all that time, they had life insurance. And after a few years, it was basically free in that every dollar they paid in as premiums was going into their cash value and more. They used all the cash value they had built up. Now the policy lapses. In that scenario, it's like they had a high interest bearing savings account that came with free and life insurance. They emptied the savings account and the insurance terminated. Did they lose anything? No. They actually gained more money than they had deposited, and they had free life insurance as long as they maintained the account. So again, no catch. And that's all the possible catches I can think of with infinite banking. So no, there is no catch. Well, except that it just sounds too good to be true. And as a result, many people will just not allow themselves to take advantage of it. And that's sad. And that's why I'm on a mission to get the word out about infinite banking and help as many people with it as possible. Now, if you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash flow warehouse strategy, you can watch our 60-minute free webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. No obligation, no catch there either. If you'd like to apply to become a client of ours, we would welcome that. And the application to become a client is also below. That is the link to the application. We're here to help, and we look forward to helping you. So for now, aloha and mahalo for watching.